Hi, this is Kerry Artak with Artak Advisory, and this is our gold analysis for the week of Monday, April 15th, where in print and combination video format, we provide weekly analysis in both the Comex Gold futures as well as the most active gold ETF, symbol GLD, proper name Spider Gold Trust. In order to take a look at the bigger picture, the longer term outlook, some of the major support levels below the market, we really need to avail ourselves of longer term price data that of course is only available in the futures market, where I at least have Comex data going back into the early 1970s. The GLD, that is the ETF, it's existed for less than 10 years, so we really can't take into account some of these longer term parameters. So in order to do so, once again, we're going to take a look at a Comex Gold futures chart going back into the early 1970s that'll provide us some of the longer term perspective that we really need. So without further ado, let's move on. All right, this is a monthly Comex Gold futures bar chart. Goes back to 1974, nearly 40 years of activity here. You can see the 1980 high, the 99 low, the 2011 high, the stratospheric run that kicked in really after that 08 pullback low. I do want to mention the fact that we did mention a sell signal a couple of months ago, actually at the very beginning of March. February posted an end of March settlement. We mentioned it in our monthly ETF market report. A little plug there, my apologies. But if we go back to that letter, you can see that we mentioned a long-term sell signal below a formation in the ETF. But if we jump back to the gold chart here, I can show you how this played out on the weekly chart. At that point in time, I'm converting this to a weekly chart now, so it's blown up. You can see the 06 high, the 2011 high, the 08 low, and you can see this formation that for this week is at 1686.4. You know, there's no way we're going to get there this week, but I'm just mentioning it to you for illustration purposes. That's our long-term sell signal. This is the signal that, once violated, told us that the 2013 high is in and that downward trade is expected. Now, because of this sort of accelerated run to the upside, picking your points in terms of objectives is sort of a challenge. And what I like to use in these particular cases is the double channel extension that I call it. And it's simply this formation here. It's a doubling of this range down to 1085.4. That's rising on a weekly basis. That's our big picture objective on this particular move. But as I'll show you in a moment, we do have a preliminary support area between 1285.6 roughly and 1303.9. These are the big picture static levels that we could get to in a matter of, well, if the last week's volatility continues, it could be anywhere from 1 to 3 weeks. But I don't expect this volatility to hold on. I think it's going to be more in the area of anywhere from 8 to 12 weeks perhaps. That's kind of the outside of this time horizon where we should get down into the support zone. Let me jump back to a monthly chart here and show you what I mean by the 1285.6 to 1303.9 objective. 1285.6 is nothing more than a 38% retracement from the 99 low to the 2011 high. On the way back down, 38% Fibonacci 1285.6. We also have what I call sort of a 100% wave count, if you will. I don't know what the proper term is, but that's what I've called it for years. And it's essentially taking this 1980 high and the 99 low and taking that range and subtracting it off the 2011 high. So it's sort of an A, B, C, D pattern. 100% to the downside off of this wave count takes you to 1303.9. So you have less than a $20 target here, a $20 range of support that should be respected for its ability to not only contain monthly selling pressures once tested, but quite possibly through the balance of the year. And that is our objective following this sell signal that we received last week, a secondary sell signal that I'll get to in a moment. So let's jump to the weekly analysis for Comex Gold. All right, we'll take a look at the newsletter once again with a new chart illustration, sort of a blown up version of the one that you can print off. And I just want to illustrate once again that we are in a sort of a secondary sell signal mode below this 1535.70 formation, expecting over the next anywhere from, say, 1 to 3 weeks to as far out as 5 to 8 weeks, this 1353.30 formation. That's our next target, nearer term. Keep in mind we've got the longer term objectives in the 1285.6 to 1303.9 region, which I illustrated earlier. Now for the week itself, there is a decent support level at 1471.6 that can contain selling on a multi-session basis, possibly for the week itself. This is backed up with a support level at 1465.8. I don't have that illustrated. So this is a range of support that you can see capable of containment into later week, above which 1515.20 is in reach this week. And if we push through that level and settle a daily sessional above it, then this 1533.4 to 35.7 region is in reach. That's a range that can contain strength into May activity, below which, once again, 1353.30 is our next target. If we settle early this week, say Monday, Tuesday, below 1465.8, this ball keeps rolling to the downside. 1445.7 is a quick one-day objective. 1419.10, perhaps 1398.50 within the week. So just keep in mind, don't get hung up in the 4570 or the 1910 area. These are session containment levels only. If we happen to close below 65.8, then 1398.50 is certainly attainable with this type of volatility within 3 to 5 trading days. This pretty much rounds out the analysis for the gold futures. Let's jump over to the gold ETF. So now we move on to the GLD for the week. But before we do so, let's take a look once again at the longer term parameters mentioned earlier in Comex that relate well to the GLD. If you recall, we have a long-term 1085.4 objective in Comex Gold. We can make the same channel extension objective for the GLD. As you can see, in February we settled below the 161.61 formation, which elicits a long-term objective of 103.04 in the GLD, which, by the way, is rising on a weekly basis. And once again, we'll take a look at that long-term Comex chart. That 99 low and 2011 high, 38.2% retracement is 1285.6. And also that point count that we looked at, the ABCD pattern at 1303.9. Both of those levels essentially equate to 123.85 to 125.67 in the GLD. On to our weekly analysis in the GLD. The chart looks essentially identical to the futures market. The numbers different, of course. And we settled below an 18-month congestive pattern last week. This week at 146.26, that's our overhead resistance, below which over the next several weeks we should reach this 133.96 formation that can contain selling perhaps through May activity. Although keep in mind the chart that I showed previously, our longer term objective, those numbers that we received only by analyzing the long-term 40-year Comex Gold futures chart, those equivalents at 123.85 to 125.67 are essentially a 2 to 3 month objective. We could get there sooner than that, of course. It could be a matter of 2 or 3 weeks. But this 133.96 formation is worthy of your respect in that it can contain at least weekly selling pressures and quite possibly monthly containment. On the way down this week, we've got a decent support at 142.81 that can contain selling into the later week if we tested Monday. If we tested Tuesday, Wednesday, possibly it could contain weekly selling pressures. And so long as we're above it, this 146.26 to 149.05 area is ripe for testing within the week that once again can contain strength through the balance of April trade. Now, don't be surprised if we happen to settle this week, perhaps Monday, below 142.81. And if so, bearish momentum remains intact. Expecting 139.54 within a day or two. We could conceivably test this 136.52 area within the week, which essentially starts a wide range of meaningful support through the balance of the month down to 133.96. That really rounds it out. If you have any questions about this week's analysis, don't hesitate to shoot me an email. I'll be happy to reply. But thanks for tuning in, and we'll see you next week.